Markets around the world are feeling the heat this week, with growing uncertainty over tariffs, tech companies under pressure, and the IPO scene hitting pause. From Apple potentially hiking prices to Tesla dealing with backlash, trade tensions are reshaping how businesses operate. Let's break down what it means for companies, consumers, and investors alike. Technology companies, especially Apple and Nvidia, are facing significant disruption amidst escalating trade wars between the US, China, and Europe. Tariffs increase operational costs and impact pricing strategies, directly affecting consumers and businesses alike. Apple, heavily reliant on international markets and Chinese manufacturing, is navigating turbulent waters. Let's take a closer look at the risks Apple faces due to tariffs.
Good morning. Thanks for having me. Apple is really sort of the poster child for tariff-related risk right now. It does so much manufacturing overseas, especially in countries like China and Vietnam, which are some of the countries that have been hit with some of the highest tariff rates. So there is so much uncertainty surrounding the company, surrounding its earnings potential in this kind of environment. What are they going to do? What are tariffs going to look like? Are they going to have to raise prices? If they do, what is that going to mean for demand? Are they going to absorb these higher costs? If so, what does that mean for margins and earnings? There is so much uncertainty here. And because we're talking about Apple, which is still the biggest company in the world, it's obviously has a lot of...
And it's not just Apple feeling the pinch. Tesla is also dealing with consequences linked to nationalistic sentiments and company perception in overseas markets.
When I was reading the Ives note, there were some very specific points, which is that, for example, in China, it's not just the tariffs themselves, it's the reputation and association of Musk with the policy that might drive Chinese consumers to buy domestic models.
Yeah, that's right. And I think what we've seen from the Trump administration is that they've really sort of, stoked this nationalistic sentiment in other countries already. You think about Canada being
The IPO market slowdown is a major concern for businesses that rely on public listings to finance growth. Due to uncertainty and instability in the market, companies are putting IPO plans on hold, seeking alternate routes to provide liquidity to shareholders and employees. The current volatility has effectively stalled IPO activity. Let's hear why executives fear the IPO market is frozen.
Reports as to whether or not they'd actually tap. But Greg, do we think there has to be a step away for the entirety of 2025 as it stands?
I think that's strong. I think it's a little bit wait and see. We're definitely in pause mode. I think people want to see what materializes. I remain an optimist. I'm hopeful that trade deals will get done. But if this uncertainty, this instability persists for a long time, and if we...
In response to the stall, some tech companies are exploring secondary trading options as a liquidity lifeline until markets stabilize.
What's interesting, let's bring those names back up, is a lot of people work at those companies. A lot of them have a broad base of investors. Many of them, the employees and investors, watch this program. Does this pause in the IPO window open up the secondaries market or put pressure on the companies to give employees liquidity in other ways?
Absolutely. We've had a huge dearth of liquidity, since 2021, frankly, and people have been waiting for the IPO market to open up. We've started to see companies doing tender offers in order to alleviate.
The ripple effects of tariffs also extend to consumers as companies face difficult decisions, absorbing rising costs or passing them on to customers. Apple is contemplating rare price hikes, marking a departure from its previous U.S. pricing strategies. Historically, Apple hasn't increased iPhone prices in the U.S., but the upcoming iPhone 17 might change that pattern due to increased tariff pressures.
With suppliers, they're going to push suppliers to give them better pricing. They're going to eat some of the costs themselves. They're going to make supply chain changes. But ultimately, I do strongly believe they will have to make some price adjustments, probably with the iPhone 17 launch later in the year.
It's not just smartphones. Other tech companies face similar choices. Industry insiders are cautiously avoiding being first to hike prices, fearing consumer backlash.
Another person used the example of Apple to say if Apple came out tomorrow and announced the iPhone was starting at $1,600, quote, Trump would bring holy hellfire down on them. In short, everyone will attempt to hold down prices as long as they can, A, to hope this blows over, but more importantly, B, not to make themselves
With global markets navigating uncertainty and consumers potentially facing higher prices, It remains vital for businesses, investors, and policymakers to prepare for prolonged instability. As tensions persist, we'll keep bringing you updates on how these global financial dynamics continue to unfold.